Hello and welcome to the Morning Market Call. My name is Tim Hart. I'm here with Brock Stephens of the Silver Fund. It says on the teleprompter, I don't know what this means, I'm just reading, to introduce you as El Imprescindible. Okay, let's go with it. So Brock, on the Silver Fund, you cover financials.
Yeah, I do, on the equity side.
Excellent. And we just invested, the Silver Fund did, in JP Morgan.
Yeah, that was a pitch that I made about 3 or 4 days ago. Right now, not looking like the best timing.
Well, that happens. So tell me, I guess, first off, just the investment thesis behind that selection.
Sure. So I'm not much of a trader. In other words, I'm not looking to pick up something, make a quick gain, and dump it. Yep. I wanted to find a good value investment that we could hold on to for possibly 2 or 3 years. I thought at this time, there's been a lot of trouble with the banks. Maybe we can find a bank that's at a good price that will continue to perform well. I wanted to look at the big banks, so I looked at the big four. I looked at Citigroup, Bank of America, JP Morgan, and Wells Fargo primarily. Okay. My reasoning here is kind of as we see some of the smaller banks, the regional banks struggle, and in the future they'll probably continue to struggle with their mortgages and real estate, that type of thing.
Commercial real estate is coming up as a problem.
Is the big thing. Yep. Maybe as some of these struggle, some of their flow will move up toward these bigger banks.
So let me see if I can restate that and see if this is accurate. Regional banks, there's going to be additional failures there. Mm-hmm. Their assets will trickle upward at pennies on the dollar to the big banks. Is that kind of what you're thinking?
Yeah,
that's what I'm thinking.
Definitely. And with these big four banks, I mean, you've heard the term too big to fail. Yep. They're going to be around, and eventually their stock prices are going to increase. So in looking at these four banks, I kind of discounted Bank of America, Citigroup. They're still not completely on their feet. Wells Fargo and JP Morgan throughout this crisis have posted positive earnings, which was impressive to me. Right now, JP Morgan is trading at a relatively low PE ratio. So in other words, their price to their earnings is about 14 right now, and on average, it's typically up around the 17 to 20. Normalized earnings, if you look at earnings in normal years past going forward, it's particularly low. And they have had positive earnings, especially third quarter of last year and fourth quarter. And so going forward, I think it's a good play.
So on last Friday, they had a positive earnings surprise, but the stock price still went down.
Right.
That was kind of weird. What happened there?
It was weird, and it goes to show that you can do a lot of analysis and things can seemingly go your way, but the market might not respect that. So what happened was we made our purchase the day before earnings were released. It was anticipated that earnings would be about roughly 62 cents per share. Earnings came out at 74 cents per share.
And we thought we were going to win.
Yeah, it sounded good, right? Yep. And the stock price lost 2%. The reason being is that they posted strong earnings in kind of more their investment banking areas. They did well in trading and some other things, but people are still nervous about their commercial side, their lending, that sort of thing. Even though they've got a very small percentage that is in commercial real estate, and although they've put aside roughly $40 billion to protect themselves against future losses in this area, people still weren't happy about it, and even with the positive earnings, the stock dropped.
And then this week we got, what, a 6% drop, roughly?
Yesterday.
And that had to do with an announcement from the White House. Tell me more about that.
President Barack Obama, in his continued public display of disaffection, is that a word, Tim? Disaffection?
We'll go with it.
With the fat cat.
Imprescindible.
Okay, thanks.
Whatever.
It feels better being on the show knowing that your knee is touching my knee. It gives me a sense of comfort. But anyway.
Awkward.
Let's see. President Obama made an announcement yesterday.
I love you.
Thanks, Tim.
Okay.
He made an announcement today, and while he was speaking, the Dow Jones dropped about 219 points while he's speaking, right? Our stock dropped 6.7% on the day. What he said was basically, if you're a bank, you got to make a decision. You can either be a commercial bank or you can be a proprietary trader. Proprietary trading means trading with your own money, basically for profits.
Yep.
And he's saying if you're a bank and you're borrowing money from the Fed, you shouldn't be able to take those risks and trade with that money. Well, JP Morgan makes, a lot of money off trading. Goldman Sachs makes even more. And so this worried the market, the stock dropped, and we took a hit.
Okay. So what do you think long term? Are you still happy with the thesis long term?
No, I think, we're getting into some political opinions here.
Yep.
Long term, for one thing, I don't think what he said will happen. I think it's people are angry right now. They want to blame someone. We've heard President Obama call them the fat cats on Wall Street. We'd love to blame greedy bankers on Wall Street, but ultimately what caused this downturn is people like me taking out mortgages they couldn't afford. Of course, Wall Street's happy as long as we're doing that and make a profit off of it.
So in terms of the investment thesis long-term for JP Morgan, it's trading below fair value,
right,
in your opinion, because of political risk and political uncertainty that you don't think is going to play out as negatively as perhaps the market is concerned.
Yeah, I'm hoping that will all kind of blow through, that people will kind of forget about wanting to be angry at someone else, that this is a strong bank. It's a strong company at a fair price, that 2 to 3 years down the road, they'll continue to perform well and their stock price will show that. Okay.
And it was Mr. Morgan who bailed out the government all those years back. So, turnabout is fair play.
Exactly. Absolutely.
Okay, great. Thank you so much for joining us on the Morning Market Call, Brock, and thank you all for listening in.
Thank you.
Morning Market Call is a production of the Marriott School of Management at Brigham Young University and is made possible by generous donations from Larry Tashjian and Gary Williams. This webcast was produced by Greg Lee, Tim Hart, Julie Kellett, and Jonathan Marucci.